light on what it takes to IPO, but navigating growth and profitability, the balance between that, the judicious balance that is required for the founders, for the execution team. What does it mean in terms of capital allocation? What does it mean in terms of diversification? How do you judge risks? All of those will be issues that we discuss here. I'm going to start by talking to you about the decision on why to IPO. And in the case of Zomato, the decision was on account of COVID. I remember Dipi saying very clearly that it was a desperate contingency plan because COVID had impacted your business so badly that you had no choice but to raise money, and you weren't even worried about the kind of subscription that you would get. So take us through that time on the decision of why IPOing and when you finally decided to go about it.
Yeah, thank you, Shereen. Yeah, so for us, I think it started with that. During COVID, around July 21, our business had shrunk meaningfully in the COVID times, and it was still loss-making. And fundraising from private markets was not an option at that time because no one knew how from public market investors. And
because the private market had dried up.
Yes, and of course, there's been no history of before us a company like us, which is loss-making, raising money in public markets. So, my first reaction was like, this is even going to be harder than raising money from private markets. But I think nevertheless, since we had no option, or in our case, that was where it started.
Absolutely, it could be more than just a financing event. For many, it could be an exit option provider in many instances, and it could just be a natural progression for a company as part of its life history and its life journey to go public. But Aloke, let's talk to you because what we've seen in the case of Zomato, for instance, been around for 15 years and then the decision to actually IPO. In your case, 17 years. You've been around for 17 years and then the decision to IPO. And in fact, the first attempt at IPOing didn't go as per plan. You pulled back and then decided to go ahead when the market sort of came back to some semblance of normalcy.
Yeah, absolutely. So Shereen, I think one similarity is like we attempted to raise a private round back in 2018-19, didn't go as per plan. And we said, look, let's make the company profitable. So we worked for the next 12 months to make the company profitable. First quarter of the 2020 calendar year, just before COVID, we turned profitable and COVID arrived. And we took a decision saying, look, this is a time when most OTAs are going to play defense. It's time to play offense. And you might remember, but we were refunding people left, right, and center, even though money wasn't coming from airlines.
And you didn't lay off people.
And we didn't lay off anyone. We actually hired more people in the team in our customer support because people were not picking up calls at airlines and OTAs in those days. And we just said, look, if we actually do this right, we'll come back in a big way. And it did. So when things opened up,
accumulating good karma, is it?
when things did open up, FY21 for us was actually bigger than FY20. And in the COVID year, we were profitable. And that gave us immense confidence to say that, look, the future is going to be only better because travel hasn't opened up yet. The second, I think sometime in February, March 21, we had a board meeting. We just acquired, in fact, we made two acquisitions during COVID, Confirm Ticket and Abhibus. And during that board discussion, we said, so we did, but we said, it's perhaps the best time, right? And we filed our first filing, back in late 2021. We got probably 6 months delayed because by the time, we got the approval, fair enough, let's wait. And for 2 years, we just executed, grew our revenue and profits. We were 6 times of pre-COVID last year. And that's the time when we said, maybe it's time to pull the trigger now.
So karma did work in many ways than one. Aloke, let me come to you now. What gave you the confidence?
Even on the day of IPO, we had almost 70% of the money that we raised as a private company is still in the bank. The business model is more established now, so it becomes more predictable. It becomes a liquidation event for your investor to it. Because as founders, and this is not something which a lot of people can appreciate. As founders, this is the only thing. Do not have confidence in the survivability of this model. Then we have wasted 15-20 years of our life.
Continue to drive profitability and drive profitable growth, and yet not IPO. I mean, that's what Zerodha essentially is doing at this point in time.
See, I don't want to comment on any of the business, but a listed company will usually be more stable, and it will seem to be more stable. Right? Also, like the insurance category, you need the trust as well.
Right.
So eventually, this is more about in a conservative way. Just saying, okay, we have more trust that the company will survive for much longer now once it's listed. So there are multiple reasons.
Yeah.
But for us, capital raise was actually the last reason.
Last reason, yeah. Capital raise was the last reason. It's an important point that you bring up about trust, especially in regulated businesses like yours, and I would imagine that that does play a part. Kunur, but let's talk about the many shifts that have happened. One, of course, the breadth and the depth of India's startup ecosystem, it's changed dramatically in the last 20 years, as I pointed out. The private sector and the private market enthusiasm has been waning in the last few years, and we've seen that funding winter, which now seems to be much more sort of structural in nature, at least as of now. And then the ability for the public markets to understand and perhaps appreciate new age business models more or better, especially after the likes of Zomato have gone public. What do you attribute to the kind of confidence that we're now seeing in these stories from a Dalal Street perspective?
From a market perspective, new age businesses growth is never the question. Everybody knows whenever any investor invests into India, essentially it's for significant growth. And when you compare new age businesses versus anything else which we call traditional companies listed, the growth is way superior. The question was always around profitability.
Yeah.
It was a question which was asked until 2022, 2023, that these companies which are growing at this pace, at what stage they will actually deliver profit. And I think once some of the bigger ones, two of them sitting here, have listed and delivered, demonstrated it, I think that's where the whole market appreciation for the businesses has happened. And typically all these cycles start with the larger companies, which are...
Vijay, I think you know the answer, but you are still asking me this. But that's a very different topic.
My intention exactly
That was really your question.
My intention exactly as Shereen is saying is there a ixigo plane that we are going to see?
Is there a KTM plane that we're likely to see?
Absolutely never.
Maybe a Zomato plane. Is there a Zomato plane likely, Akshant?
We can't answer these questions. That's how you navigate public markets. So sometimes you have to say no.
Yeah, we can't make forward-looking statements.
Can't. Well, unless they're 5 years out, not for the next quarter. But Aloke, do you see M&A as being a growth driver for the future?
Not for us. Our DNA is more built, as Aloke also said. We have rarely ever invested into anything, and it may take time, but it gives so much more strength to the whole business if you build it organically within the company. So, and it gives chance to the internal team to also grow up and take on larger responsibilities. So, we are very big fans of building in-house.
Okay, fans of building in-house. I'm not asking for a guidance for the next quarter or even the quarter beyond that, but Akshant, I'll start by asking you, the headroom for growth across the 4 businesses that you currently operate in, and we would like to understand. I mean, everyone now believes, after having no conviction in the quick commerce story, everyone's suddenly a believer in the quick commerce story and can't seem to get enough of it. I mean, what is the headroom? People are calling Blinkit the Amazon moment for India's internet. How would you describe it, and what do you believe?
Which made it more convenient. E-commerce did that to the country 15 years ago, and therefore it grew. Food delivery did that, made it easier to consume restaurant food. So at least we don't obsess about trying to even spend time on how big this could be, because we'll discover as we go along, and we'll worry about 5-10 years out. And today on the quick commerce business, we are seeing, the way we're trying to therefore answer that question for ourselves is to go to smaller cities and open a store and see for the 40th largest city in this country and see if it works there. So we're on that journey right now to see how deep this market is. And one is like whether this works in a city. Quick commerce in Dehradun, does it work only in 1 location or 5 locations or 10 locations, right? So I think all of this, at least in quick commerce today, are growing well. So I think more predictable in terms of how growth will shape up in that business from here. But quick commerce, I think, is still very early in terms of how large, in terms of us have.
Less than 33% of hotel rooms are booked online. So we're still very early, right? Despite almost all the OTAs listed today, and a lot of them would already be using us. So we see that as an imminent vector for growth. And that's how we have been delivering faster growth than the market on the flight side of our business. I think hotels is a new opportunity we've just gotten into, about 9-10 months back, and we think there's still a lot broken in the space that needs to be fixed. So we'll work on that, and then that's when we'll talk more about it.
Okay. On yes or no on healthcare from you.
So the experience management part, it's given. We are very committed to doing it. See, we talk about social security for middle class. There are only 4 risks for the middle class that they should plan about. Risk of early death, risk of late death, risk of hospital disability sort of stuff, and risk of child cost planning. I mean, about 30% of GDP, and you're trying to solve for that. So we'll do whatever it takes, and we have a very, very, very long time frame, 20 years, 30 years, whatever it takes.
20 years, 30 years. Yes, we've got more questions. We're going to try and get a microphone. If you have questions, do.
The health sector is booming, but I think there is something missing that is happening in urban areas. The traffic is also increasing, and the patients are not being able to reach to the hospitals. 1-1.5 घंटे के अंदर जब तक वो पहुंचता है और कार्डियक अरेस्ट हो जाता है बीच में, तो पेशेंट चला ही जाता है. तो क्या वो एरिया खाली नहीं है जिसके अंदर हम लोग की एयर एम्बुलेंस ट्रैवल में दे सकें और आलोक जी को कंट्रीब्यूट कर सकें हेल्थ सेक्टर के अंदर?
I mean, it's a real problem though, and many entrepreneurs.
You know, these are called PPO models, payer provider models. If insurance company is paying and in healthcare is the service provider, you can create lots and lots of different stuff. Whether it is healthcare at home, healthcare in transit, small setups, multiple things are possible. But the problem is today the focus is how do I maximize my revenue from this customer, and that is not going to solve for it. You have to focus on the quality of life and longevity of life, not just the revenue from that customer.
Can't we put some...
Yeah, I think it's an important point. I think the biggest change once you go public is how you communicate. And I think the earlier you acknowledge that and embrace that and actually...
On the premise of growth, and we wish all of you the very best of luck in your future endeavors. Appreciate it.